Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio, we have Dr. Merav Ozair, global blockchain and cryptocurrency expert, to discuss the legislative and regulatory structure and landscape in the U.S. and the implications that that has for the digital asset space. Merav, it's great to see you as always. Welcome back to Trade Talks, and let's talk about Gensler's position on Bitcoin and digital tokens.
Okay, so well, I think that Gensler, mentioned that several times in the past, I don't know, couple of years or even more, since he came in office. He's saying that again and again and again, that all tokens, all digital assets are securities, but Bitcoin. Only Bitcoin, out of everything else, Bitcoin is a commodity. He said that himself. And it even said that it is a commodity. So it's already, kind of like putting the restrictions of the CFTC, and everything else supposed to be supposedly under the SEC jurisdiction. If everything is security, then it falls under his jurisdiction. So that was his claim, and he's saying that again and again and again. He said that in the congressional hearing that was, early in the year. He said that in all of his, in all of his interviews, and also he had this office hours. I don't know if you know, the SEC has office hours when he has his videos, and his latest video as an answer to Coinbase, when Coinbase, sued the SEC
right.
of we want more clarity because they don't give any clarity. So he basically reinforced everything that he said, always says all the time. About that everything is security and they all have to come and register with the SEC and the regulation is clear, etc., etc.
Now, there's something called the Howey test.
Exactly.
And there's 4 criteria that has to, so that you pass the Howey test. Tell us about that.
Yeah, so when he said there is a clear regulation, it's not that there is a regulation, saying exactly, thing. I mean, what he is referring to, and he's also referring for that, in his interviews, congressional hearings, and even in that video that I mentioned, that was a thing in April that he came out just after they sued him. It's basically a Supreme Court case from 1946. We're talking about 80 years ago, like pretty old. But the 4 are the following. It has to be investment of money, that's 1. In common enterprise, that's 2. With expectation of profit, that's 3. Derived from the effort of others, that's 4. So you need to invest money in an enterprise, expect profit from the efforts of others.
So it sounds like digital tokens pass the Howey test, although I think the discrepancy could be enterprise versus a digital creation. Is that where they're stuck?
So here's a few things that that we can think about it. I think Hamilman, was mentioning that a few years ago about Ethereum, for example, and I even had this discussion with the regulators in Europe. When you start build a platform, a protocol, it starts with a group of developers. So it's kind of centralized, right? It has to start with the development of any protocol, even if it's going to become decentralized. But it will not be a decentralized before it is built. And it takes time to evolve, and with the adoption and the network effect and everything. So even Ethereum, if you think about it, at the beginning, probably, when it was just built in, I don't know, 2014, 13, maybe even early 15, it wasn't really decentralized in what it is today. I mean, today there's no doubt about that. I mean, Hamilton, I think, Hamilton even mentioned that he believes that for now Ethereum is definitely a utility and not a security. So that's the question: is there an effort that you expect? Because if it is decentralized, and that's what this digital token is supposed to be, that's the essence of this decentralization. That there's no central authority, there's no one that is controlling it, there's no enterprise behind it, right? I mean, yeah, maybe you invest money in it at the beginning, but then there's no investment. It's runs by the foundation, etc. So that's the point. And I even had a discussion with the regulators in Europe. Like, when does it converges to that decentralized entity? It starts with a group of developers. So are you going to regulate it then? And then even the EU is taking more of a proactive approach. is struggling with this definition of decentralization. When it becomes decentralized. And that's, I think, the problem here more than anything else.
So why do you think Gensler's actions are being criticized the way that they are? The criticism it's pretty heavy, especially over the past couple of weeks.
I know. I mean, well, first of all, he's being very ambiguous.
Right.
He's saying, oh, the regulations are clear, regulations are clear. I mean, do you have the documents to send to us? That's, what basically Coinbase was asking him, a while ago with the petition. Give us, the clear, A, B, C, D.
They want to be regulated.
Exactly. Give us A, B, C, D, what we need to do. There's no A, B, C, D, what we need to do. Instead, he's suing them for violating, and that is what we say, in the U.S. we have regulation by enforcement. It sounds like, the EU at least, they're coming with MiCA. They have other regulations, that in the works. They're trying to talk with the industry. They're sending, a consultation paper, asking for answers and, taking their time. At least they're trying to understand what is decentralized, what is not decentralized, and then basically throwing away out of the window, the definition of securities, because they don't even have a clear definition for that. They don't have a how it is. They don't have anything like that. So I think what the criticism, it has some merit in it, because he's not being clear. He's not saying, okay, this is what you need to do, A, B, C, D, in order to be regulated, and this is what it means, centralized versus decentralized. At least try to do something, and don't say, oh, there are securities, and we're sending you a subpoena, so this is why the criticism is coming. I mean, either he will have to be more clear, and not just come after whether it's Coinbase or Kraken or Ripple or was it Robinhood also, and Crypto.com, and I'm not talking about Binance, because Binance is a different story.
Right.
So instead of going at each and every one of them, and I don't know who else is gonna, he's been cracking down on, I think, but they have 50 something cases so far. Maybe even, and it's growing. I mean, instead of doing that, just come up with some regulations, some statements.
So why is it crucial that U.S. legislators take a more proactive approach?
Of course. I mean, it's better this way, because at this point, if it comes from the legislators, then, so there's two ways, that this can be kind of resolved, so to speak. One, and the better, and the one, option, which in my mind is a better option, is that it's going to come from the legislators. Those are we decide, okay, it's going to fall under the restrictions of the SEC or the CFTC, or maybe they will come up with some new office. They call it Digital Asset Office or blockchain or whatever they want to call it, and then they will say exactly. In fact, there is a bipartisan suggestion, for a bill. You know what I mean, which basically put all these digital assets under the CFTC restriction. They're all supposed to be commodities. It seems to me that Gensler is trying to kind of steal, take it away from the, because he knows that probably this is where it's going, and he wants to take control over that. I don't know. There's some. I mean, people are, do say that there's maybe some politics behind the scenes.
Of course there is.
But I don't want to go there, because I'm not a politician. That's not why I'm here. So I mean, so the better solution that it's not taken away from all these different regulators, whether it's the OCC or the CFTC or the SEC, and saying, okay, we don't want them to start start a fight with each other, and because this is what they're doing, because the CFTC chairman is saying, oh, Ethereum is definitely a commodity. It's already been registered with us, so it has to be registered with us. So there's kind of like a fight with him. So instead of that, they will come up with their own legislations. They will say exactly, what the rules are, what do you have to follow, and which office, is supposed to take care of that. Whether it's several offices, whether it's a combination, whether it's a new one, it doesn't matter. Just tell us what to do, and we'll do it. Because I don't think that whether it's Coinbase or Kraken or anybody else wants to avoid following the law. I don't think this is what they want to do. They just want it to be clear.
Right. Well, they want to operate their business, and they also don't want to go offshore because then we lose, the innovation
Exactly,
opportunity.
and then this is another, criticism that this is what Gensler is getting so much criticism, because it's kind of like people are saying that he's driving innovation overseas, which is true, because when I'm talking to the ecosystem, and I have a lot of talks with the ecosystem, a lot of people in the US is saying, well, we probably going to move to Japan, and we're moving to Singapore, and we're moving to Thailand, and they're already moving. And once they move, they're not going to come back, because starting,
it's not easy to just move operations.
Yeah, I mean, exactly. Once you move, you move. I mean, you're not coming back, and that's unfortunate, because we have brilliant minds, brilliant innovation, and U.S. has always been, the center of innovation, and I don't want us to lose that. I really don't.
All right, Merav, appreciate the insight. Thanks for joining us on Trade Talks.
My pleasure.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.